Every app has its moment. Is Duolingo's moment over? We will talk about that, but first, look at this shocking graph. Duolingo's revenue is increasing, but stock price is not following revenue. It is going down. What is going on? Also, if we look at the free cash flow, it is skyrocketing. What really shocked me is that they had a strong Q3 revenue of $272 million, up 41% year over year. Not only that, but their paid subscribers rose to 11.5 million users, and that is 34% increase. So everything seems to be going well for Duolingo. So after the earnings, the stock price should at least increase 10 to 15%. But what happened is the stock price crashed 44%. That is insane. I will dig deep and answer all these questions, and I will tell you, is that Duolingo's biggest opportunity to buy the dip or the beginning of the end? If you think you learned something new from my videos, please give this video a like and let's start. I will start with these apps. These apps had their peak moment and didn't last long, and that's why investors started to worry that Duolingo will follow these apps. Clubhouse was a popular live audio app to the point celebrities started using it, like Elon Musk, for example, and Mark Zuckerberg during COVID, but only 2 years later, the app died. Same thing with Be Real. Same thing with QuizUp. QuizUp had a long ride of 7 years, but it eventually crashed. All the rest didn't last long, but the shocking thing is that Duolingo had another app that is called Tiny Cards, and this app died in 2020. That flashback of Duolingo dying as an app is still haunting investors, but what really scared investors is that during Q3 earnings, management announced that they will make a strategic pivot. Their new strategy is that they will not focus on maximizing profits from monetization by growing more subscribers or increase profit margins by increasing prices. Instead, they will try to develop the app to be more effective and engaging, that users can stay longer and learn more and build more trust in the app. This should be a good thing for a company, but investors started to worry about the short-term revenue cut. This same scenario happened to Netflix in early years. Netflix in the first years did the same strategic pivot. Instead of raising subscription prices, they went ahead and spent billions of dollars on content and personalization, building loyalty first. That paid off in the long run. Users didn't just subscribe, they stayed subscribed for years. After building loyalty, Netflix went ahead and raised prices without losing users. Duolingo is doing the same now. It is building long-term learning loyalty before pushing for increasing revenue. Not only that, but even YouTube did the same thing. From 2005 until 2010, YouTube focused more on user experience and creator tools, not ads, and they tried their best to make sure users' experience is the best thing, which is sticky and addictive. The more you stay using the app, the more the app makes money. And that's why algorithm these days is working on this favor. Once you watch one video about a topic, couple of videos will pop up talking about the same topic or the same niche. This is the closest thing, or the closest explanation to what they were trying to do back then in 2005. So YouTube did not introduce ads not until after 2010. After 2010, they introduced monetization through ads and memberships. Now YouTube is a multi-billion-dollar engine. Again, Duolingo is doing the same. Duolingo is focusing on how long a user can stay using the app before monetizing and increasing revenue. Basically, making sure users don't quit after 3 months. Yes, it will hurt the short-term revenue like what happened to Duolingo now, but it will build a it will build a strong foundation that will pay off huge later. Some investors sold Duolingo now because they thought, why wait for revenue growth later when we can invest in another stock that is paying off now, like AMD, for example. And once they shift their strategy into capitalizing on revenue and increase profit margin, then we will jump back and buy Duolingo. But is Duolingo going to wait for you before it skyrockets? Who knows? But the question is, if you bought the dip now at $194, this is the price as I'm recording right now, will it recover? Well, there are three scenarios, as always. There is a bear case, there is a base case, and there is a bull case. I will tell you which scenario, in my opinion, is more likely to happen. So let's start with the bear case scenario. This is the scenario that I think is less likely to happen. this scenario, growth will decelerate a lot. Not only that, but also competitive threats reduce growth. As we know right now that huge AI platforms like ChatGPT and Gemini start to get wider adoption, and users started to use it a lot for learning as an AI tutor. So this will eat into Duolingo's revenue. Paid subscribers start to slow down, Duolingo starts to fade slowly, and people start to see Duolingo as an app, not a platform anymore. Margins fall and valuation multiples compress. With this scenario, we can see Duolingo drop more and fade away by time, just like the apps that I just shared earlier. But again, I don't think this scenario is likely to happen, and I don't think AI will eat into Duolingo's profit, because if you remember just 2 months ago, many people said the same thing about Google. People said that people started using Google less as a search engine and started using ChatGPT more. The stock fell sharply during that time. Just a month later, Google announced their revenue and the stock skyrocketed and hit all-time high. So no, AI is not a threat for Duolingo. With this scenario, we will see the stock price will range between $130 to $160. But again, this scenario is not likely to happen in my opinion. And now let's move on to the base case scenario. Well, this scenario that I think is more likely to play. Revenue keeps growing 25 to 30% per year, but margin expansion stays slow. Engagement and retention improved moderately, not viral, but stable. New features like Duolingo Max perform decently, but not explosive. Earning meets or slightly beat expectations, no surprises. A consistent user growth, solid engagement. With this scenario, you will see the stock jump 40 to 60% up in 2-year period. The stock price will range between $260 to $320. Now let's move on to the bull case scenario, and I think this scenario is less likely to happen. There is only 30% chance that this case will happen. In this case, the efforts Duolingo is putting towards focusing on how long a user can stay using the app before monetization and increasing revenue pays off quicker than expected. Like it pays off within 1 or 2 years. Premium subscribers grow from 11 million to 20 million. Wall Street sentiment flips bullish, viewing Duolingo as an AI-driven education platform rather than just a language app. With this scenario, we can see the stock price range between $380 to $450. In one of my last episodes, I explained why I believe next year will be a bull year for growth stocks, and Duolingo could be one of the biggest comeback stories if this happened. So if you haven't seen this episode yet, check out this episode. It will show you exactly why 2026 could change everything for stocks.